for Zerodha, I must say. On this note, I once again welcome Nikhil. For the audience, please feel free to ask questions. There is a raise your hand option. Please click on that and we'll unmute you. You can ask your question. Nikhil, so let us start with how did it all start? So what is the story about Zerodha? What does it mean? And how did you conceptualize the concept?
Hi, Varun. Sure. So at the very beginning, let me tell you what Zerodha means. Zerodha is the combination of two words. It means zero because we were charging zero brokerage in an environment where the incumbents were charging percentage brokerage. Rodha means no barriers in Sanskrit. So the combination of the two means no barriers. Zerodha, for me personally, I think we conceived it or conceptualized it maybe 12, 13 years ago. This happened at a time where me and Nitin were traders and we were paying a lot of brokerage fees to people who were in the ecosystem back then, like the brokers of yesteryears. Uh, at the very beginning, the intention was not necessarily to create a retail broking platform, but more to create a platform for ourselves to place trades on our own and save significant costs that we were paying to other brokers. That's how it began at the very onset.
Met each other.
I think we're very different as people, but also maybe at some level have similar models when it comes to business. So it's a great relationship. I think uh, we have our pockets in which we like to focus. He focuses on that, and I focus on mine. And I think we work very well together. We've always been very close as brothers growing up, and I think the relationship has continued.
Wonderful, wonderful. Uh, See, Zerodha now, as I mentioned before, it needs no introduction, and we have many big banking companies which also offer online brokerage platform now. How did you manage to stay ahead of the curve, and what are your plans for future to remain as a market leader?
Back in the day when we started, I think our USP was the cost. We were charging a lot lesser than everybody else. And we've never really done any marketing or we've never put out ads as such. So I think most of our client acquisition has been word of mouth only. And back in the day, it used to be cost. At some point, it evolved into being the tools and the products that we offer. Now, a new customer of Zerodha comes to us for the robustness of the entire platform and all the tools one has at hand. I think the broking space kind of, when we began, there was a clear demarcation between discount brokers and full service brokers. That line somewhere along the way kind of merged. Both the industries are now one and the same because A does what B does and B does what A does. But to summarize that, I would say at the very onset, it was the cost advantage, followed by how transparent we were in an environment which is very opaque traditionally. Now the USP has moved to the products that we offer and the ease in using our platform.
And how has been the technology since you started Zerodha
Mhm.
years ago? How the technology has been involved, and do you think in future we are at the peak in brokerage technology platforms, or there's more to come?
So there's plenty to come with the burgeoning number of participants which enter. I think tools and the technology at offer will also innovate to keep at pace with the new people coming in.
So when you started, there was a brokerage, and Zerodha was a chain maker with zero brokerage. Now I have seen many platforms with zero brokerage now. I think similar to what Zerodha's offerings are.
Mhm.
Do you think there is enough market, as you mentioned, 6 to 7% penetration, that every player can coexist, or do you think you will be doing something additional to remain as a leading player?
I think there is room for people to coexist. The people who innovate faster will generally take the lead in that. But I think many new participants who we haven't heard of today will probably also have some kind of a stake in the pie in the future. But generally, when a market is growing as quickly as the equity participation in India is growing, I think innovation is a byproduct. And I think we will see a lot more of that.
Okay. And information is being stored at Zerodha's platform for the users, and
Mhm.
all across the world, we see many cybersecurity attacks happening on this fintech platform. How secured is Zerodha's platform, and how a user can be rest assured that their information is safe?
So, in India, especially, let me take our example. We don't really uh, store too much information as a broker. We're as secure as can be with the little bit of information we have. But generally, we are just a midpoint between a user and an exchange. So we don't match any orders ourselves. All we do is when an order comes in on our platform, we route it to the exchange, and all the order matching happens at the exchange level in the Indian exchanges. So it's a fairly secure ecosystem. Uh, we've gone a mile further, and we've also not allowed for people to place transactions on accounts which are not their own. Unlike traditional brokers where you would have a relationship manager placing orders or you would have a sub broker placing orders, in Zerodha's platforms, we don't have any of that. So it's typically the end user alone who's able to place or transact on his account. I think a combination of all of these things makes Zerodha more secure than our competitors.
Okay, so coming back to the days when Zerodha was at the nascent stage, and I'm sure you would have never thought that you'll become a leading player. But
Mhm.
as the time passed and you started getting a lot of traction, what all challenges did you face, and how did you overcome those challenges? I'm receiving this question, I think some 16 or 17 times I've received this question in last 24 hours from different people, that I should ask this question. What challenges
Right.
did you face and how did you overcome? I think people want to learn from your story.
Mm. Right. So, Varun, a lot of this was very organic. It was not a plan which was mapped out very vividly at the very beginning. Uh, the biggest determinant in things like this, I think, is the ability to change very quickly when market conditions change. We might have been, we don't have external investors and we don't have many people uh, who kind of have to be, who kind of have to vet every decision that we make. So I think that allowed for us to be a lot more agile and change according to market conditions. And that might have had a bigger part than even we perceive in the journey that Zerodha has had.
Were you ever approached by VCs in India? VCs are very active and they reach out to companies, or
Yeah,
you think uh, you were like working in silos, and you're living in Bangalore, right? So Bangalore,
yeah,
you make some noise and VCs will be after you.
true. I mean, even internally, we work in silos. So I didn't really ever interact with VCs. I think Nitin did a little bit of that. But sure, yeah, there has always been VC interest. We've been profitable from the very beginning, from the first year we were in operations. And we've always luckily had the ability to delay gratification in a way. And we have never taken any VC funding.
And how does it feel to be called as first bootstrapped unicorn in India?
It's nice. I mean, valuations again are subject to interpretation. I don't think we really pay attention to valuation metrics as much as the next startup. That is not really what we spend our everyday doing. I think we are more focused on building a better product, doing stuff that we like, much more than valuation and stuff like that. Because it
And
doesn't
people
really.
are willing to participate in Zerodha story, including me. When are you planning to go to Dalal Street?
I don't think so because, like I said, we're a very lean operation and we take great pride in the agility we have by not having shareholders who have a say in the decisions that are made.
Mhm.
I think to retain that agility, it wouldn't make sense for us to go and list on the stock markets.
Okay, that's very
Mm.
interesting.
Yeah.
You would have done some sort of analytics on the investors which come on Zerodha's platform. Do you have some information on what is the demography or the age group of those investors and any uh, income portfolio income profile of those investors? Do you have some analytics on that?
Sure, I can give you some. So in the last 6 months, we have seen the millennial and the Generation X, if you were to call it that, investor come in large numbers. Our average investor age has gone down to about 30. It used to be 32 earlier. Our biggest cities in terms of geography remain the Maharashtra belt. So it's Mumbai, Thane, Pune, followed by, Gujarat and the large cities there.
Mhm.
Average typical ticket size of a new user in the last couple of months is about 80,000 rupees. We're seeing a lot of small investors come into the ecosystem, people who have not invested and are first time investors coming in right now. What else can I tell you?
So millennials preferably do intraday trading or they go long.
Uh, it depends on what kind of a millennial you're looking at. If it's somebody who has a full-time job, I would think is investing. If somebody is taking up trading as a profession, I think is doing more intraday trading. A lot of even a lot of the privileged, the HNI, ultra HNI crowd in the last couple of months seems to be getting out of the managed funds and starting to invest on their own. I think if you would have looked at the mutual fund numbers from Amphi last month, we've seen like as much as a 80% drop in the money going to funds. People are coming into the market and choosing to do investment directly versus going through a fund manager as they might have done traditionally.
Sure. And you have touched upon a very good point on HNI and ultra HNI. I'll come back to True Beacon
Hmm.
story as well. But I think let us open the house for the questions from the audience as well. We have received some questions. So Manan, if you can unmute Divakar. Divakar wants to ask a question to Nikhil.
Yep. Divakar, you may ask the question now.
Thanks, Manan. Hi, Nikhil. I just want to quickly understand, having looked at regulatory environment in other markets, right, like Singapore, New York, London. Could you maybe give us some understanding of what are the regulatory constraints and challenges you're facing? And I'm thinking that it also affects your costs and consumer experience. So maybe you can talk a little bit on that point.
Sure. So I have to give, I mean, to give credit where it is due. I think the regulators in the last 3 or 4 months during COVID have done an incredibly good job. They kind of mandated that the leverage and the intrinsic margin component a broker is allowed to give his client for that to come down significantly just when the crisis began. So retail investors were not allowed to leverage as much as they could traditionally through Corona. And I think it has made a significant impact in how robust the market has been in the last 3 or 4 months. In terms of regulatory hurdles in trading, I would say the biggest problem in India is the cost associated with trading. We have something called the security transaction tax, which is not there in most other geographies or markets outside of India. Something which was introduced by Chidambaram during a Congress government. It charges you about 1,800 rupees per crore of turnover on the sell side alone as a STT fee. I think that in itself, like that in isolation, is one of the largest uh, problems in reducing liquidity in the market. Many instruments in the market, especially in the derivative space, are leveraged instruments. And say, for example, you're trading Nifty, which is the most traded contract in India. If you were to pay as much as a point in, in a combination of security transaction tax, SEBI charge, NSE's transaction charge, it makes it hard for an intraday trader who's buying and selling many times to survive. So I think something really has to be done to kind of rationalize how much we pay as STT. I would say this not just for us, but everybody who is a participant in this industry. Hopefully, I mean, there have been a couple of budgets where people have spoken about reducing or doing away with STT altogether. Hopefully, in the next few years that the incumbent government is around, they do something about it and take out STT.
Anything, anything related to, say, pooling of accounts?
I think for person A to be not able to operate person B's account is a good thing. So regulation in most cases is actually net good for the market because it brings the bad players in line. I don't think it should be allowed, like, the rules around how a broker's fund has to be maintained separately and the client funds have to be maintained separately, or why person A cannot pool accounts and place transactions for a bunch of users or manage their money. All of these regulations are beneficial for the market. I think they clear the ecosystem in a way and make it a bit more transparent. If you want,
Nikhil, we lost you there.
can you hear me?
Yes.
Sorry, my phone went off.
Yeah.
I think I was taking a question from Divakar, right?
Yeah, you were just discussing the pooling of accounts.
Yeah, I think it's a good thing that it's not allowed. If you want to manage money for a third party, I think you're rightly placed in using either a PMS model or starting a category 3 AIF if you want to come into the equity ecosystem, or starting a mutual fund or being a traditional AMC. I don't think individual users should be allowed to kind of place transactions on other people's accounts.
Fair enough. Fair enough. Thank you. Thank you very much.
You're welcome.
Okay, next we have a question from Murtaza.
Mm-hmm.
Murtaza, you may ask your question now.
Hey, so thanks guys for doing this. It's awesome to like speak with you guys on this. My question to you, Nikhil, is so you mentioned that initially it started off as zero brokerage, right? So how did the revenues come in initially, and where was the profit made if there was no brokerage fee involved initially? And if I may also add a second question, a lot of startups like find it irresistible to take VC money, right? Even though they might be profitable and they might be making money. So how did you resist the urge to take VC money? Because that obviously could have meant that you could have grown faster. Not necessarily, but like what in your mind led you to not take more money from outside?
Sure. So to the first part, at the very beginning, like much before Zerodha, so I've been doing exactly the 15 or 16 years now, which is trading. So when Zerodha began, we had most of our income come from trading versus broking. Like I was mentioning earlier, one of the main reasons why we started Zerodha was to kind of like get rid of the costs, which were, back in the day, a broker would charge you as much as 0.5%, and you would spend 50% of the profits we make trading on paying broking fees to other brokers. So even after we started as Zerodha, at the very beginning, trading was the way in which we would make money. To your second question, why we did not take VC money, I think one of the biggest reasons for that is how much we credit agility to the growth that we have had and the ability to change and evolve very quickly. When you have a third person on board who has to vet every decision that you're making, I think it makes you a little bit less competitive and agile. In terms of why we did not take money and utilize it to grow faster, since we don't really do any marketing or put out ads or anything like that, our go to market strategy has always been to build a better product, and people will talk about it and organically they will come in. There wasn't much we could have done with the money even if we were to take it. We are people who are more believers in the slow growth but organic growth. I think a client you kind of onboard on your platform by giving him, say, cash back or giving him a short term bonus is not as sticky as a client who comes onto your platform because he really likes the product. Those kind of users kind of generally stay on for much longer. The ones who are on our platform because they like the platform versus the short term, benefits or coupons or cashback that we might be giving.
Murtuza,
Hope
hope
that.
your question is answered.
Yeah, actually, I have one more if I'm allowed to.
Yeah,
Of course.
sure.
Right. So, this is again towards the future. Now, as you mentioned, that there's a huge headroom potential to grow, right? A lot more
Hmm.
users can come in,
Hmm.
uh, not just to Zerodha, but overall into stock investments. Do you think there's a future for, in air quotes, social investments? Like you kind of, uh, a lot of people that might come in today might not really have the knowledge of which stock to invest in and when and why. So anything that you think you guys are doing or might plan to do, or you think that's even a right direction to go, where you're allowing people to follow top traders, investors, kind of form groups, basically being able to see other people's trades, if the other person allows that, to kind of make your own decision based off of that.
Right. We flirted with this idea many years ago. We kind of set up a platform where a pro trader or a star trader would kind of sign up and allow for people to follow what he was doing for a fee. For some reason, it did not really work out. I think investing, bar trading, is a very long-term game, and to figure out if following something works or does not work, you have to put many years into the whole ordeal, and then at the end of it, you kind of figure if the person you were following helped or not. It's an interesting idea. We did try something around it, but maybe in the future we'll try something again. But it is a good idea.
Got it. Thank you so much.
Great. So, Nikhil, we have another question from Amit.
Hmm.
Amit, you can ask your question now.
Hey, Nikhil. My
Hi.
question is more around your team. In
Mhm.
one of the recent interviews from Nitin, I read that like initial 100 people that you hired are still with you for I think past 10 years, and you haven't taken any VC money. So I'm sure you must always have that cost constraint around you. And being in Bangalore, which is like such a tech-savvy market, people are throwing money to get the right tech talent out of it.
Mhm.
How did you manage to keep that team with you, and what's your culture of the tech inside it? Because I know that initially you built this platform for yourself, but when
Mhm.
you're giving it to thousands of users, the stability, the usability, and all those things now started mattering for you, right? So how is the tech culture within your company, and how you're managing to keep that talent in that competitive market where tech talent is like really hard to sort.
I think all credit for this goes to a colleague of mine. His name is Kailash, who is our CTO. I think, strangely, for most people who work in that environment in Zerodha, I don't think money is the biggest incentive. These are people who really enjoy building a product and watching the product scale. And I think Kailash is, or K as we call him, is extremely good at creating an environment where that is possible. The culture outside of the tech team has been great from the very beginning. I think some of the things which have helped us is we don't have many layers of hierarchy. So you don't really report to an assistant manager who reports to a manager who in turn reports to somebody else and stuff like that. We have far fewer layers. I think a combination of that with just how we got lucky with the first 100 people we hired, I think together have kind of like maintained that culture. I think Nitin also is extremely good at this, he's very good at championing a cause, motivating people and stuff like that. So many tiny things I think add to why the culture is what it is at Zerodha.
And if I may ask, what's the size of your tech team as of today?
Uh, I can't recollect the exact number, but it's not a big team. I would say like under 50.
Okay, yeah, that's quite a significant achievement. Congratulations. Yeah, thank you.
Okay,
Yeah.
tell me one thing. The penetration of financial product in India is very low as compared
Right.
to other markets in India, other markets across the globe. And people in our country, they do not possess much knowledge about financial market and what are the risks and what are the rewards. How are you increasing the financial literacy? I read somewhere about Zerodha University. I also looked at those pages, but apart from that, online blogging, apart from that, digital education, are you also doing something offline as well with different V schools?
Yeah, sure. I think the problem in India is our education system has not really evolved in the last couple of decades. In many ways, our method of pedagogy is much like how it used to be in the Industrial Revolution. We are trained in school to work in an assembly line versus being able to, go out and think and create and innovate. A lot has to be changed here, not just based on the financial ecosystem, but education overall. I think financial knowledge has to be kind of part of curriculum because it's so important to anybody who's growing up from a very early age. I would not even say business schools, but why shouldn't you learn about what to do with money right when you're in school, maybe like middle school or something like that. So, in our small way, in our own way, we have made a few attempts to kind of improve the amount of financial literacy. Varsity, which Karthik, it's actually one person who has created the entire Varsity platform. His name is Karthik Rangappa. I think has been a great attempt towards reaching this cause or this end, but a lot more has to be done. If governments were to kind of like wake up and include financial literacy in a much better manner at a much earlier age, will go a long way in making our youth more competitive in a way.
Mhm. And post financial literacy, all those people will become first time investors. What is your advice to them for the first time investor, so someone who is picking up the first trade at Zerodha?
What I typically advise people, so there is a lot of nonsense, like noise in the market. So there are people who are providing SMS tips, people who are saying, buy company at 20 rupees and sell it at 50 rupees, and a whole lot of nonsense like that. So you have to understand, when it comes to the market, nobody knows what will happen tomorrow, let alone me, but anybody who might be giving you advice or claiming to, give you a stock tip. Uh, Basically, if somebody knows what is going to happen with the stock tomorrow, he would go out and buy it versus tell you what to do and what not to do. So to stay away from all of these stock tips or stock advisors who tell you which stock to buy and stuff like that, I think is a great way to start. At the very beginning, I would say definitely do not use leverage. Maybe stay away from derivatives as well, and stick to investing in buying in large cap blue chip companies which you believe will do well in the next decade or two,
Mhm.
and fundamentally analyzing the company. I mean, uh, financial numbers are available everywhere. So I kind of personally prefer a top-down approach wherein I will kind of say sector A, say IT sector deserves 30%, pharma deserves 20%, or something else deserves 20%, and then pick the best companies I think in that industry will the kind of companies which I think will do well in 10 or 20 years, then allocate capital to them. I think that's a good thing to do. So basically, stay away from advice, stay away from tipsters, do not leverage, stay away from derivatives, and build a reasonable amount of diversification in your portfolio. That would be fair advice for somebody who's looking to enter the markets today.
I'm sure you would have read about Robinhood of the US. Are you doing something at your end as well so that people don't feel jittery once there is an uncertain time and they lose money?
The problem is, so Varun, outside of the stock markets, companies have a life cycle. All kind of companies, small companies, medium-sized companies, large companies. I was reading an interesting number somewhere that if you were to like put all the companies that exist in the ecosystem, a typical life size of a company is about 8 years. You have to figure out what what phase the company is in while you're allocating capital. And in terms of Robinhood, I think if you're talking about the Robinhood phenomenon, wherein a lot of American investors are buying small companies, buying companies which are on the verge of bankruptcy and stuff like that, I would say best avoid it, especially for a first time investor. I think you're much better placed buying a large cap blue chip company where the numbers are transparent and the governance is kind of vetted by the process of how long the company has been around and how many people have kind of like researched and analyzed the stock. So I would say stay away from the tiny companies and the Robinhood kind of investing and focus more on the, buying the in the Indian context, I would say companies like Infosys, Reliance, and Cipla and the likes.
Mm-hmm. And do you also plan to set up some sort of a SaaS platform, like people will have their own algo and use your platform for trading or something of that sort? And any competition from the other algo trading platforms to Zerodha?
We have something called Kite Connect, which does a lot of this. So it's already there.
It's already there. Okay.
Yeah.
But that's like for the higher ticket transactions.
Not really, even for a small trader.
Okay. Okay. Interesting. We have one more question from, in fact, two questions from Ashutosh and Udit. Manan, can you please pick up those questions?
Sure. Ashutosh, I am unmuting you now. You can ask your question. Ashutosh, please ask your question.
Maybe we can move to Udit.
Yeah.
Thank you, Madan.
Oh, yes, he's here.
Okay, yeah.
Good afternoon, Nikhil.
Hi.
So Nikhil, I read in a report that the number of users, that the number of new users who have started investing or trading increased exponentially in the last 3 to 4 months just because of this lockdown. So Nikhil, do you think that this high number or this high user base will continue, or once everything clears out, we will go back to the previous levels? What are your thoughts on this?
I think there'll be a flattening of the curve. We've seen too many people come into the market of late. I would kind of credit that to people working from home, having a lot more time to hand.
Yes.
But more importantly, I think right now in the ecosystem that we are in, other opportunities or other asset classes are not performing very well. So a typical user who would put money in a bank FD is no longer kind of getting even a return that would beat inflation. And real estate, which has been where traditionally our middle class has allocated most of their capital, has not done well in the last 5 to 10 years. So the avenues to kind of allocate capital in India or in the world for that matter are kind of drying up. So I think a lot more money will come into the financial markets. But the pace at which money came in the last 3 or 4 months is kind of bound to kind of, normalize over the long term. I think it will come down, but it will come down and it will be beneficial for the ecosystem overall.
Yeah. Okay. Okay. Thank you. Thank you, Nikhil. Thank you so much.
Okay, next we have a question from Udit. Udit, you may ask your question now.
Hi, Nikhil. It's an honor and a pleasure to interact with you. So my question is, I am assuming that you are a trader as well as an investor. So I believe that the mindset of a trader and an investor is different. So you juggle between donning the hat of an investor and a trader, considering that for a trader, like I believe that it's about preserving your capital and going with profits. But in the investor, you have to look as an investor, you have to look at the long-term perspective of a business or a company. So how do you don the hat of two separately, and how do you deal with that?
Sure. So personally, I think I have the mindset of a trader more than an investor. I'm trying to evolve in my own personal journey and kind of start to think more like an investor of late. Up until recently, I was managing only prop capital, but not third party capital. But ever since I have started doing that, I think the need for me to think like an investor has kind of gone up significantly. I'll tell you the biggest dichotomy in this sphere, especially in India, is as a trader, you end up paying the business income tax, which is 42%. But as an investor, you're only paying the 10% long term capital gain tax. So especially in the Indian ecosystem, I think it pays to be an investor versus a trader because it's very hard to kind of compound capital paying tax rates which are that high. But in terms of psychology, I think both are very similar. In a sense, you're looking for value in an ecosystem which is generally driven by sentiment. So you have to pick what phase the market might be in, or figure out what your own personal strategy is, and kind of like time the market in a way. Even though I would not say it's the easiest thing to do, you have to make sure you stay away from the markets when they're over levered or doing extremely well, and make sure to enter the markets when there is chaos and people are talking about why they want to like be selling all the stocks that they hold. But very similar, trader and investor.
Just a follow-on question on this. So, considering the current valuations in the market, do you think, in your own perspective, that the markets are over-levered?
I would say from a very short-term outlook, like if you were to ask me for the next month or two, I think we have run up more than maybe we should have run up, because the fundamentals on the ground and the prices of stock kind of don't correlate at this point. But a lot of that, I think, has to do with the fact, like I was mentioning earlier, there are other avenues to put money into have kind of dried up. So as long as there's money available cheaply and the other asset classes are not doing well, we might all be surprised with how much the markets run up.
Thank you.
Okay, Nikhil. So since you mentioned that you started managing other people's money as well, so which I'm sure you're talking about True Beacon, right?
Yeah,
so
that's right.
How did it start? What is the background? What is that story?
Sure. So a couple of years ago, I was trying to allocate my personal money onto a private bank, a wealth manager, stuff like that. There were many inefficiencies in the marketplace. So typically, when you give your money to, say, a private bank, let's take Standard Chartered, for example, the guy who sells you the fund at stand C will typically charge you 1 or 2%. And I'm talking about the good ones. The bad ones might charge you as much as 3, 4, 5%. So if I give them 100 rupees, the distributor will charge me 1 or 2 rupees. The fund manager will then charge me a setup cost to set up the investment. Then there is an annual maintenance charge of maybe 2%. Then it is kind of locked in for 3 or 4 years. And then if you want your money early, you have to pay them an exit load. On top of all of this, there is a carry wherein if they perform beyond a certain hurdle, you pay 10% of the profits or 20% of the profits. So your $100 when it goes to the fund manager is only $96. and that $2 you pay every year kind of compounds into being a significant impact on your portfolio over the long term. So the reasoning was like, when I looked at this, I was like, it's very hard for a model like this to beat a passive investment into a ETF or a fund which kind of just mimics what the benchmark is doing without the fees. So we removed all of these inefficiencies. We said we will not have middlemen, we will not have an annual maintenance charge. Our fund will be completely open ended. You can put in money when you want, take out money when you want. We will not have exit loads, we will not have setup costs. Plus, we will make it extremely transparent. So, on a daily basis, you can see exactly what is happening with your money. You can log into a very simple dashboard, see which sector the money has been allocated to, what your NAV is, and do all of this online versus having to call a relationship manager and try and convince him to give you back your own money. The reason to have started this was the inefficiencies and the incumbents. It was driven, I would say, largely by the problems I faced as an investor allocating money to third party fund managers. But I think it's a great product. The only thing TrueBeacon charges is it's a client aligned asset management company more so than anybody else, because in TrueBeacon, when you put $100, all $100 enters the fund. It is transparent. The only thing you pay is if the 100 becomes 110, you pay a 10% carry or 1 as fee. So we only profit if the client actually makes money. If the client does not make money, TrueBeacon does not make anything.
And you monitor the health of portfolio every year or every quarter? How does that work?
No, every day. It's a combination of two buckets. There is a long only bucket, which is about 65% of the fund. TrueBeacon will have many funds in due course. Right now, there are two funds which are active. There is a Cat 3 AIF based out of India for onshore clients, and there is a FPI vehicle in Mauritius to bring foreign capital into the markets. So TrueBeacon is public markets only. The Cat 3 AIF and the FPI have a similar model wherein we have, like I was saying, two buckets. 65%, the first bucket allocates money to large cap Nifty companies only. So amongst the 50 companies, which are the largest in India, we pick a basket of about 20 companies. It's a very fundamentally sound top-down research kind of method we use to allocate money to the 65% bucket. The balance 35% is based on mathematics. It's strategies which take advantage of volatility in the short term. So we run mean regression strategies, we run delta hedging strategies, we do pair trading, things which do well when the markets do not do well. The fund has a more conservative risk profile than a traditional ETF, just based on the hedging component or the long short component that we have in place. So the fund has done extremely well. I think in amidst all the volatility that we have seen in the last 3 or 4 months, the fund I think has about a 25% alpha over what the Nifty has done in the last 1 year. And our goal was only to create about a 6 to 8% alpha. So the target rate of return we are hoping to achieve is if the Nifty does 10 or 11%, we want to be doing 17, 18% return on TrueBeacon.
So delivery is the new sales. So did you, but initially, did you try to market TrueBeacon to seasoned investors in India as well? Are they on board as of now even?
So Varun, it's a very niche group. So typically, we don't even call them investors. We call them members who sign up to TrueBeacon. Because the minimum investment size is $2 million. But outside of that, we find that most of the investors who come on the platform are very strategic in a way, because they would be people who are promoters of large listed companies, or they're corporate heads or influential people who have a voice from across the world. What we also do for them is, once you're on the platform, say for instance, I have the promoter of India's largest private bank as a client, and I have a client who is maybe Kenya's richest man. We kind of connect them on the platform and see if they can work something else out in their own holding companies and the businesses that they do. So outside of just managing money for these people, TrueBeacon brings in a lot of value. I don't know. Have you heard of the YPO?
Oh yeah. I'm very much familiar with. Yeah.
Yeah. So think of it as a much nicher version of YPO, a much smaller, tighter group wherein members kind of help each other out actively.
Mm-hmm.
So we're trying to create like a cool version of a private bank, do everything a private bank or an old school merchant bank is doing a lot more efficiently than they're doing right now.
Mm-hmm.
Very early in that journey, it's only been a year that the fund has been active, but so far so good. I think we have about 50 families. The fund has outperformed the Nifty by 25%. So these families are happy as well. And in due course, we'll be adding a whole bunch of different products in there. We're planning to do everything that a ultra HNI might need by using TrueBeacon.
And you also have one more venture which is called Rainmatter. So can you share more details on that as well?
Sure. Rainmatter is a venture capital company. We kind of fund companies who are early stage, typically a ticket size of between $500,000 to $1 million kind of ticket sizes at the very beginning. And we kind of participate in their growth journey at every level when they go out and raise funding. It's very focused on fintech. It's the ecosystem we understand. Also, people like taking money from us versus taking money from another VC because we bring a large captive audience to the product as well.
Is it a cat to fund or is this a prop capital? Just name is Rainmatter.
It's prop capital. It's private markets only.
Okay.
It's much like any other venture capital firm.
Mm-hmm.
The only large differentiation I would say is our focus in fintech.
Mm-hmm. So as we move to the close of this session, so we'll pick up one question and then also ask one more question in the end, and then we'll close for the day. So Puneet has a question. Manan, can you please unmute him?
Yes. Puneet, please ask your question now.
Hi, Nikhil. So good to talk to you. My question is that how does your day look like when you started your company versus today, and what has remained same over the years?
I have to say this, but my day has looked exactly the same over the last 16 years. Very typically, I go into work at 8 a.m., markets open at 9 a.m. You're kind of firefighting while the markets are open and kind of like looking at things with hindsight bias once the markets are closed. Not much has changed.
And is your tattoo your marketing? I mean, your trading strategy?
My tattoo
On your right hand.
on my right hand. Oh yeah. So this
Is it your trading strategy?
no, it isn't. It isn't. It actually says "Be here now."
Yeah,
It's
not wrong.
it's a book I read many years ago. He talks about the concept of not procrastinating. We spend too much time thinking about what happened in our past and worrying about our future and kind of miss out on living today. So he's an Indian author. His name is Ram Das. Really liked the book and then got it tattooed. It kind of points to me, so only I can see it.
So one more question from Nishit, and then I'll move on to my question then.
Sure.
Thank you.
Nishit, please ask your question now.
Yeah, hi Nikhil. Can you hear me?
Hi. Yeah, I can.
Yeah.
Yeah, my basic question is revolving around the derivative market in India. So recently I read a fact, and it would be really great if you could just check for the fact that I read that India's derivative market is greater than that of US in terms of volume, not the value but the volume. So first I want to ask that is it the right fact or like is it wrong?
Sure. So you have to go back to the very basics when it comes to derivatives. Derivative markets are larger than the equity markets, even in India. 90% or 80% of the volumes that happen on a daily basis happen on the derivative markets. The reason why we might have a larger volume here versus equity markets and the opposite is true in America is in terms of leverage that you can carry on an overnight basis. Derivatives are the easiest way to do it in India. So if you have 100 rupees but you want to hold 500 rupees of stock, by using leverage. Derivatives in India allow for you to do that. In America, the equity markets also allow for you to do that. So you kind of like, don't have to go the derivatives route. So it's more a structural thing than a fundamental thing. Think of it in terms of how much leverage people are using and which product they're using to get leverage. So the name for that product in India is derivatives. In America might be something else. But leverage products generally contribute a larger portion of the turnover than unleveraged products.
Right. Following on that, a few minutes back, you said that a new investor is coming into the market, and there is a very big influx of investors we are seeing these days, as pointed out by one of my fellow attendees. Like you said that derivatives is something you don't need to jump in directly, especially for a person who is starting his trading or investment career, being active or passive, right? But given the fact that in India the volumes are high for derivatives, so are we going in the right direction in terms of derivative market? Because on one side it's not safe for the people who are directly jumping into the market or managing their portfolios, but on the other hand we have the highest volume.
The thing with derivatives is since there is leverage, a person who is a very savvy investor or a person who has a business that they're running and they want to hedge whatever business risks they might have, derivatives are very useful. They have a use case in our markets and there is a need for us to have them. Let me give you an example of this. Say, for example, you're a steel maker, say you're Tata Steel, and you want to hedge the price of your raw products which you might need towards manufacturing steel. You could do this very easily by using derivatives. Or if you're an IT company which has a currency risk and most of your payments are coming in dollars, you could do that again by using derivatives. Or even if you're a normal investor who has a large equity portfolio, say you hold a lot of stocks in the Nifty, you want to hedge the downside risk, you can buy a put, use derivatives. There are many use cases and many ways in which derivatives are beneficial to the ecosystem. Typically what happens is the first time user does not use it for these reasons, but kind of uses derivatives to enter a levered product just so that his profits or whatever might be higher by virtue of the leverage he takes. So I would not recommend it for first-time investors, but there is definitely a use case for derivatives.
Right. Thanks a lot.
Wonderful, Nikhil. So let me put you in a difficult situation. If you have to choose, what is close to your heart? Kamath Associate, Zerodha or True Beacon?
Zerodha.
Zerodha. Okay. It was quite easy then.
Huh?
It was quite easy to choose, right? So I thought I'd put you in a difficult situation. Okay. So one last question, Nikhil, and then we'll call it a day. If you are not working on Zerodha, True Beacon, or Kamath or Rainmatter, what are you doing then?
Well, much like every. I mean, if I have to tell you about now because of the lockdown, I think our options are kind of like fairly thin right now. So probably like I play badminton a little bit. I go to the gym. I watch TV. I read a book.
And what other? If it would have been a pre-COVID situation then?
Pre-COVID situation, I travel a lot. More for work than anything else. So typically 10 days in a month, I would be traveling. So I'd like to, go and figure out the new kind of stuff to eat and the new kind of things to see while I'm traveling whenever I can make time. That kind of keeps me going and entertained.
Wonderful. Okay. Thank you so much, Nikhil, for your time on Saturday morning. Stay safe and looking forward to hosting you again. All the very best
to True
Beacon and all your ventures.
Thank you, Varun. Thanks, everybody.